Bang. We have arrived. Let's go. Rollup TV, Thursday, October 16th. It's 12:04 in the great state of Florida on the Eastern Standard Time Zone. We've been flying all over the world, conferences left and right. We wrapped up the Asia conference tour, KBW in Seoul, Token 2049 in Singapore. Markets are just absolutely whiplashing left and right. Ethereum's under 3,900. We're going to see what this means. What is happening? Are you getting caught up in short-term gyrations of price? Or are you a long-term convicted believer in one of the greatest technologies since the birth of the internet? We're going to find out today on Rollup TV who you are and who we are. Thanks everyone for listening, for watching and tuning in. Got a great show, great lineup today. Sam from Frax, just one of the guys that is absolutely tuned in when it comes to stable coins. Obviously last weekend and you know, we're still seeing some aftermath of the last weekend. Had quite the implications for stable coins. We saw USDE, Athena's stable coin, get whiplashed itself, got turned around. I think it fell, I don't know, to the extent of like 20 cents over on Binance. All kinds of shenanigans happening on Binance. There's never a dull day. We're going to be talking to Sam about all of the Binance shenanigans, the listing processes, the volatility, all of the things that you guys have seen playing out on the timeline over the last few days. Sam from Frax is a great guy, high density and high signal, very tuned into the ecosystem. So we're gonna get that intel from Sam, and then we've got another Sam who's gonna join the show. Sam Trabar of BitDigital, one of the leading Ethereum digital asset treasury companies, will join us. This guy is he's with the likes of Michael Saylor. He's with Tom Lee. He's with 𝘗𝘁𝘁𝗏. This guy, not only did he build a company on Ethereum, tokenizing some Manhattan real estate, which, if anyone knows, New York real estate is some of the most primed real estate in the world. He was able to tokenize it and put it in Ethereum. He was also then able to sell that company to 𝘗𝘁𝘁𝘏, the co-founder of Ethereum. I'm also seeing messages from Vitalik in a Telegram chat, all kinds of things. Ethereum is so back. We're going to get all of this intel to you guys very shortly. Also in Ethereum land, apparently we're just Ethereum maxis today. We've got ZKsync RWA season unfolding right before our eyes. I believe Alex had a prominent announcement that he unveiled at Digital Asset Summit in London this week. We're going to hear directly from the horse's mouth. I also had a just great conversation with Alex in Korea. It was a pleasure. Him and I tend to get philosophical. He's got a very libertarian focus to his work. So we're going to be talking about this. And last but certainly not least, 𝘗𝘁𝘶monad. Let's get the chat fired up. Let's get some 𝘗𝘁𝘶monad in the chat. Come on, guys. Monad season. Did you claim your airdrop? Where are you guys at? Where are you guys at? 𝘗𝘁𝘶monad. We're going to get ready. We're going to get fired up. So let's make sure that everything is cooking. And then, yeah, I'm pretty stoked. Again, certainly last but not least is Tunes, 𝘗𝘁𝘶monad. We're going to get everything that's happening. Monad launched their claim. We connected. You guys may have had some trouble, but we're going to clarify all of the happenings with the Monad airdrop claim. I saw some things like people were keeping track of their interactions with Monad testnet on paper. What? You guys are maniacal. That is insane behavior, keeping track. You're gonna just take a notebook and turn it into a block explorer. What? We're gonna talk to Tunes about it, because to think that these people that people are out there just taking notes on the block explorer is quite a scene, and it is in need of an explanation. So let's circle back. Sam from Frax, we're going to get up in just a moment. He's going to come on, and we're going to rehash all of the things that happened over the weekend. Just absolutely fascinating. Let's check in on the markets. I see some things sliding just a bit, but you know what? Really, it doesn't even compare to what we saw last weekend. If you look back and we do some time horizon analysis, 3 months ago, we're up 10% from 3 months ago. We're down 10% from 1 month ago. So we're just getting whiplash. Guys, don't get chopped up out there. Don't get chopped up. DATs are still active. Apparently these DATs just have cash on hand. We're going to talk to Mr. 𝘗𝘳𝗪𝘏𝗧𝗏 about the happenings last weekend, and he's going to tell us about what they're doing in DAT land. Are they buying? I think some of these treasury companies are under MNAV, and so we have to think to ourselves, are they going to be selling the underlying ETH to buy their shares and close the gap? We shall see. We shall see. All right. All right. Let's see. We've got the founder of Google shilling Zcash on the timeline. That's pretty insane. Sergey on Zcash. Fascinating. The gold rally is continuing. Let's see. You know, I saw something that said every time after a gold rally, you see what happens to Bitcoin, and it is just something that you don't want to miss. So these things are happening. We also have a mega ETH sonar round. So I think this is going to be quite interesting. Let's see. Kobe wrote a little message about the Monad round on Echo. Hey, what's up? It's Kobe. Monad recently launched the qualification period for the airdrop. Wanted to let you know that every Echo user that invested in one deal is now eligible. Very, very cool. In your Echo app wallet, we've generated you a brand new address, eligible Monad address. This address is brand new and has no ties to your Echo investments or any deposits you make. You can use this address as one of your 8 EVM options in the Monad airdrop by importing the private key into your wallet of choice. Please do not do this with your regular Echo wallet. Mismanagement of your private key can put your investments at risk. And then it goes on to talk about the private key a little bit more. So we're going to be talking to Tunes from Monad in a little bit. But first, we've got a bit of cleanup to do from over the weekend. We're going to get Sam from Frax in here, and we're going to get him set up so that he can educate us about the stablecoin shenanigans that occurred over the last week. Guys, it's already Thursday. It feels like we're still talking about the absolutely incredible happenings that occurred over the past weekend. We're going to get Sam on stage so that he can just help us unpack what happened. Sam, it's good to have you on. Welcome back. How you doing?
Always good to be on, Robbie. How's it going?
It's going well, man. It's going well. I'm glad to see that you have survived. in fact. And man, maybe you could just help us like pick up some of the pieces here on just, the stablecoin situation that occurred. We saw some shenanigans happen on Binance. Perps, auto deleveraging. There was a lot that happened. Could you just describe like what were some of the pieces that you stuck like right away? What were some things that stuck out to you? Can you just kind of take us through your what was your mindset, your mentality as you were weathering the storm over the weekend?
Yeah, for sure. I'll actually just give some like background too, because it was a really crazy Friday because it was so normal, and then it happened out of nowhere, which is what made it the most insane thing I've ever seen. Honestly, like I know like we were there through Terra, everything, right? But this was honestly the more surprising thing because it came out of nowhere. People kept talking every day about Terra. Oh, they're like, is it gonna implode? Is it gonna implode? Is it gonna implode? Right? And then okay, fine, it did, right? But like it was a funny story because we were actually talking to like a very big hedge fund earlier in the day on Friday to they wanted to move over a lot of their cash into
Okay.
Frax USD, right? And so we were on a really good call with them. And then as soon as and it's funny because they asked some really like TradFi questions. They've never like went into like crypto, and so they wanted to actually move kind of their banking and investments and stuff into like Frax USD and make investments there. So they kind of gave us funny risk questions like, what if the Ethereum blockchain goes down? Will you be able to like redeem? And it was like, dude, I don't think you understand kind of what you're asking. No, we won't, but neither will you. Like, be able to redeem if the Ethereum blockchain goes down. But then they were really excited. We answered all their questions because they needed to, have these disclosures because they work in TradFi. And then as soon as we got off the call, I was like, holy shit, like it was insane what was going on. And so we're just like looking at everything. And after all that stuff, like Frax USD is totally fine. It's Genius compliant. The collateral is all redeemable, right? T+1 at slowest, right? And so I didn't even need to think about making like a post about, hey guys, like I actually decided against it because I was like, if I'm like, guys, like everything is okay, you kind of get like the Baghdad Bob like meme, like that people think like it's like you can just go on the thing, like the price, and ours is fine, right? Like Tether's is fine. It's like, everything is but so I didn't want to make those kind of posts and stuff, but it was insane, right? It was absolutely wild. The epicenter was clearly Binance. Like I don't know, like in terms of like conspiracy theories of like what actually the exact thing was, because I think people are still talking about it. So I don't want to come and like give my own thing like that. But in terms of stable coins, I think like the most important thing is it reminded everyone stable coins are supposed to work when nothing else does. And it's been a long time since people have been reminded of that fact. The reason the original Frax stablecoin was a decentralized hybrid model, and now FRXUSD is a totally like compliant, fully backed, base dollar of our ecosystem of a bunch of other, and people like when we got on that call, they can be sure like, okay, this thing is just, it's just a digital dollar. Like you could take additional risk on top of it. But Friday reminded everyone that if you call something a stable coin, the point is that it works when nothing else works, right? Terra worked 8% of the time, right? So like technically, right?
We likened it, to the life of a turkey, right? You've seen that chart where it's like, oh yeah, the life of a turkey is great, it's great, it's great, and then just no more. Thanksgiving.
The Nicholas Taleb one, right? Like it's just like exactly that, right? It's like if you're gonna take like risk and stuff, that's great. There's different like things that you can do it with, but the stable coin, in our view, right, the stable coin should be working when nothing else works. And then I think like, that's why I actually like came out and said, well, if that if everyone's saying, oh, this didn't work or that, you need a definition of what it means for it to work or not, right? And so everyone throws around the word DPEG, and I think it's important to have like a very clear definition of what DPEG means, and then what like price means, so that people aren't really talking over each other when they're discussing these events, essentially.
It's insane. I think illuminating what those definitions are is ultimately going to help people come to a better standard of what is a stablecoin, what constitutes a DPEG. You know, there's prediction markets for these things. There's insurance markets for these things. Like, you know, we need to have some common standards. I also want to talk about like really the fundamentals here, and a lot of it happened on Binance, and we don't want to get into conspiracy theories. But what I'm hearing and what makes sense to me is that, you know, this was not it was the difference between a fundamental issue and a technical issue. What I mean by that is, you know, back in the Terra Luna days, and FTX got, you know, tangled up and all that too. Like Sam Bankman-Fried, which surprisingly is a controversial thing to say now, I guess, but like he stole funds, he misappropriated funds at the very least, and that created this liquidity contagion that, you know, spanned into everywhere that they had their tentacles. This felt more like an engineering problem. It was the mechanism that something broke somewhere. Do you agree with this analysis, that this was like the reason that we had this sort of flash crash was fundamentally different from why we had one back in 2021 or 2 whenever FTX crashed? And if we can pinpoint that this was an engineering, a technical issue, what exactly was it that broke that led to just, you know, market makers pulling bids and ultimately seeing things that are supposed to be stable go down to, you know, 20, 30 cents and you know, 60 cents on some exchanges? Just the massive price dislocation that happened. Can we pinpoint a particular thing that broke and caused the price dislocation?
If Binance wants to give more information, then the answer is yes. The reason I didn't want to go into the exact like kind of conspiracy theories, or like this was 100% exactly as you're saying, for sure some kind of technical like price architectural thing. It was not macro one. We were like, oh my god, everything is dumping by 80% because of the tariffs. Yeah. The tariffs of like, no, please don't. There's like tariff news every single day. If the dumping was a macro related thing, then like the tariffs, the price of everything in like your life would probably be really, really screwed if it was that impactful. It had nothing to do with that. I mean, like the common sense clearly shows that. I mean, Binance is a great actor in the space overall. I know there's a lot of like, you know, like things going on between some rivalry and stuff, but overall, like I'm talking about since their inception. So like they're great, but I think it would be great if they actually this time kind of showed what is the exact architectural issue. I didn't even really go down the rabbit hole of all of the conspiracy theories. It could honestly have been like genuinely like a architectural like hack like of their Oracle system, of their thing. But again, I don't know. But one of the things that was really interesting was the auto deleveraging thing that everyone is talking about now. I kind of see it like the tariff phenomena, where a group of people, like a society, learns about a particular topic like really, really quickly, from like 0 to 100, like really quick. Like no one in the US, or honestly probably the world, knew the T word, right? Before Trump's second term. Very, very few. It was like an economic term, and like no one knew what a tariff what on average, right? Like if you ask random people and stuff. Now I think everyone, if you ask random people, they have heard the word. Maybe they can't give you a dissertation on what a tariff is, but they literally heard about it from like 0 to 100 as like a society, basically, right? And I think ADL, like as a crypto like society industry, people went from, wait, I can get like auto deleverage. What the hell is that? Even though they should know what it is, but if they're trading, right? And then they see kind of the structural different deals, right? Like some entities like Athena can't get auto deleverage, at least in specific situations based on some deals the average person can. I think that's pretty important to like kind of like talk about for traders and things like that. But overall, like I think the most important thing I was thinking of is the stablecoin stuff. And I made a post and I said, look, I don't think Athena depegged, because like my definition, and I tried to kind of define what everyone should hopefully think of as the term for like a stablecoin peg, which is from the perspective of the issuer, the issuer perspective, right? It should be how you call something depegged. And so I clearly said with like, no, you know, I didn't want to make it complicated and stuff. And I want to say, look, everyone should basically look at the issuer. Are they allowing redemptions in a timely, orderly manner? And they didn't change it from before, right? It's weird if an issuer is like, oh, every day we have, you know, this policy, and then we just changed it like today, right? But if nothing has changed, right? If nothing has changed, this stable coin is not depegged, because if I create a secondary venue, right, like a centralized platform, and I'm the one that allows people in and out, and on this platform, USDC is trading at like 90 cents, or like I make it trade at 90 cents, whether intentionally or unintentionally, for a few hours, would it make sense for everyone to say, oh, USDC is depegged, USDC is depegged? I don't think so. I don't think that makes coherent sense to be like USDC is depegged, because this secondary platform, right, that there's a centralized platform, and it is trading at 90 cents. Circle has no control over that, right? Like if you, for example, are like a bank, and you say, hey, I have this piece of paper, and you can always come and put the piece of paper and give it back to me, and I'll give you, you know, some gold or whatever, right? Just as a like hypothetical example. And for some reason, it's not your business, but for some reason, there are people trading this slip of paper between each other at like half the price of the gold that you're willing to redeem right outside your bank. Okay, I don't know what the you know the reason is for those people, right? Clearly, there's something. It's not the average reason, right? Clearly, like Friday. I don't think it's fair to be like, I don't think it's coherent. I guess fair implies some kind of value judgment. I don't think it's coherent for people to be like, this thing is depegged. Now, granted, obviously, Binance is one of, if not the biggest secondary venue, right? So it's not like it's just something. But clearly, we're talking about something that went wrong at Binance. Like that's what we're talking about until this point, right? So it's clearly not the right definition of a stablecoin peg to extrapolate it to secondary venues. And so a lot of people tell me like, oh, Sam, you're just talking about solvency or something. That's what you're saying. And I would say not exactly, but that's also at least better. Solvency means like you look at the reserves of a stablecoin, and then you see, okay, is it mark to market at this point exactly at one or a dollar, like 100% CR, or like basically higher? If it is, then you know it's not depegged. That's also at least closer, but it's not exactly what I mean, because you can actually be solvent, but then you could not be redeeming in an orderly manner or changing your like you know, redemption policies and stuff like that. I think it would be fair to say it's depegged if like, even if it's solvent, if they're like we for whatever reason they're like, you know, we're not redeeming, or like kind of like Circle, because they didn't know they were solvent until the FDIC bailed out you know, SVB, right? And it turns out they were solvent the whole time.
You'd say
like,
that back in SVB, when that bank collapsed, you're saying that they were solvent, but they depegged because USDC went down to 90. That was sort of the consensus. But it turns out FDIC, and did they stop redemptions? Is that kind of the key factor in your mind?
Well, I think what happened with SVB too was on a Friday, and
Always on a Friday.
Personally don't think, yeah, it's always those Fridays, right? I personally don't think Circle ever does redemptions on like a Friday. And I think like that's been the same throughout all of it, right? And so I think that the right way to communicate about these things, which like you said very well, is important to unify because of prediction markets, of all of these different things that are getting bigger and bigger, right? Is to say the stable coin did not depeg, but its secondary price on either one or multiple or like many venue, which is bad, right? Which should be investigated. Like why did this happen, or how do we improve it? But like it didn't depeg. My view on this is like, well, for Athena, I think we could talk about Circle a little bit differently. It's been a long time, but for Circle, they didn't actually know if they were solvent. It turns out in retrospect they were, because they didn't know. They obviously internally were like, we should not do redemptions until we know we're solvent. Turns out that, lucky for them and everyone, like they used the banking system. On Monday, when they would have opened redemptions, FDIC swooped in and said, hey, everything's okay. No one freak out. And everything was fine. But if you look at it, like truly, and like they didn't know, right? Mm-hmm. They didn't know. And also I think they would have stopped the at par redemptions until they knew. So I think they basically got lucky.
Yeah. On the Athena thing, it's contradictory in my mind. It's counterintuitive because on one hand, we have Athena making these special arrangements with Binance to protect themselves from auto deleveraging. But on the other hand, that was the one venue where USDE crashed. So like what, like, how do you do both at the same time? How do you have this special arrangement? Did Binance not honor it? We don't have to get into it. Unless you have, anything you'd like to share. But to me, these are two fundamentally contradictory things that both occurred. USDE did crash on Binance in particular, and we're not going to, extrapolate that to a broad depeg. But they have that, but then they also have the ADL protection. And so if it wasn't the ADL, if Athena didn't get ADL'd, and that's not what led to their USDE depreciation, what did?
Yeah, that is a great question, and I think actually it gives a bigger there's a bigger kind of issue at play in my opinion, which is if a lot of people use a stable coin or synthetic dollar, whatever you want to call it, and not knowing what the risks of it are, and I'm not saying it's like because of Athena or Binance or something. I'm just making a general statement about usage. You will eventually, not this time thankfully, but you will eventually have a Terra style collapse of different things, not to zero. And so let me explain what I mean, because I actually saw this debate with Jordi and Haseeb, the video they put up that they did. I think the crux of it was like, was there going to be another Terra style like crash and stuff in like a stable coin? I think the salient issue is if you have people using a dollar that they think works in many different situations where it doesn't necessarily, or like some aspect of it is not going to work. Like Athena is not similar to Terra at all. Like Athena is not going to zero. Like it's a great product. It's not comparable, but this is not the point that I'm making. The point is more subtle. It's that people on Binance, they have USDE earn, they have a bunch of these products. They don't know, like it's not like those people read S1 filings. They're not going to go and read like Athena's disclosure and stuff like that, for good or for bad, right? Like, whatever. They think it's a dollar, like they think it's like, Tether, like Frax USD that's like Genius compatible, like USDC that's redeemable. And it's not. It's a different product and great. And Athena is very, very transparent about that. But if you go and use these things and integrate them in different places, it's going to eventually get a lot of people like surprised, and then maybe hurt if there is a situation where like Friday happens, where people are like, holy shit, I need to get the heck out of this thing. I just learned what it is. I was just getting this really great APY on the earn product. Now everyone's saying, oh, like this might be, you know, insolvent and stuff. I think that's the crux of it. The crux of it isn't whether this mechanism like works or not. It clearly works. It's an amazing innovation that literally got Athena from 0 to, what is it, 12 billion or something like that, and it deserves massive props. It's obviously, and they're very clear, it's a synthetic dollar. It's not a redeemable fiat coin, but it's obviously not a fiat coin, right? It's not like USDT. It's not like USDC, Frax USD. It's not like these things, right? And they actually have something that is like that. It's USDTB, right? They released that recently. But if you use their synthetic dollar in a way that it acts as if it is, which isn't their fault, by the way, like you know, it's a decentralized, it's a token, right? It's like so if you use it that way, there will eventually be like a systemic issue when these things are not entirely solvent for a brief period of time, or like they have to remove redemption for something. And I'm not saying Athena, I'm saying the next thing, there might be a next big thing. And so I think that's very important, is like, is this thing being used as money where it's not necessarily supposed to on that level? Like the Athena mechanism is totally fine. It works. However, it could be implemented poorly in like another thing, right? Maybe they have perps on like long tail assets, and it gets really poorly implemented, right? Or maybe they don't have auto deleveraging deals, and they do get wrecked in some venues and things like that. It's not a redeemable dollar, right? And even if you impeccably manage this like so-called hedge fund balance sheet, you meaning any issuer, right? It's not the same thing. And so if people are using it as if it's the same thing as a dollar, eventually there will be like a widespread shock of like, holy crap, this thing was not a dollar. The good thing is, I don't think they'll go to zero, right? I don't think that'll ever happen, really, because the mechanism works. But that doesn't mean people won't be massively shocked that their thing is not a dollar and they might receive haircuts or like things like that later in the future. And this is just a general statement, by the way. It's not at all about Athena specifically. It's about things that aren't extremely boring fiat coins, essentially.
Right, and you're describing the difference between a genius compliant fiat stablecoin and, for lack of a better term, an algorithmic stablecoin, which is dependent on some market forces in crypto and DeFi.
Yeah, and I would go as far as to say, not even necessarily like genius compliant, even just a fiat coin, right? Like the best example is USDT, right? Tether actually increased its supply during the actual, like if you go and look at its market cap by it actually increased in supply during those few hours. I actually went and looked at it. I like USDCs went down. Some people were redeeming Frax USD. Of course, it's not as lendy, so it's totally fine, right? But the fact that Tether went up, I think that is a data point that speaks for itself, right? Like the moneyness and literally the flight to safety definition of Tether for every single, like, essentially both user on Binance, but like even globally, that is a reason why they're 170 billion plus supply, right? It is literally the flight to safety, and it works. And so I think I would go as far as to say, like, it's not necessarily just like the regulation stamp. It needs to be redeemable. It needs to be properly known as it is fully solvent. They're good for it in terms of the entire supply. But every single person essentially can go to this thing when everything else is wrecked. That's the real thing that makes a difference between, is this thing real money on chain, on venues, on centralized exchanges or not.
Yeah, and with Tether, there was never a doubt. There's one more stablecoin that I want to talk to you about, and it didn't really have much to do with the Friday crash and the weekend shenanigans. PYUSD mints 300 trillion. What is that? Like, where did that come from? I mean, it seems like a fat finger, but there's still supposedly fully reserved. So there was jokes flying about how, PayPal USD is fully reserved. They must have 300 trillion in reserves, right?
I think everyone was joking trillions, like PayPal got
Yeah.
there first. But yeah, I would be surprised if whoever did that was still employed. But I mean, obviously it was an accident. But still, like it's interesting because like for us at Frax, we have multiple checks, obviously both off chain and even on chain. Like we literally have extra code called like minting caps and things like that, exactly to prevent something really silly like this, but also more as well of like if we have cross-chain messaging and some esoteric thing happens that there's like an accident of precision or something between the different messaging on chain. I think that whatever happened, they clearly didn't have that in PYUSD's situation. I think it's an unfortunate thing, but it's a good laugh. I wonder if there'll be downstream effects of like either regulation or like things of like, if you're a stablecoin issuer, you have to have checks in place to not do that. What I thought was interesting was Chaos Labs, I think, actually paused the PYUSD market on Aave for like a brief period of time, which I think is very like very, very responsible, because you don't know, maybe North Korea has minted 300 trillion and things are about to get really bad, right? But I think that was a great idea. I think thankfully there's just nothing bad. There's just most likely like a fat finger, but it's also really good from now on, in my opinion, to when people are analyzing stablecoins, to know what the actual trust assumption is for like an infinite or near infinite mint, if like their systems are compromised and stuff. Like at Frax, we have like on-chain level contract like blockers, but also just our processes off-chain. Someone else has to look at, actually two people have to look at what the first person is proposing, and all this stuff. I would be surprised if that was the case with at PYUSD, and then two people also didn't catch it. But it'll be interesting if they do release a post more.
Yeah, it does signal the lapse in tokenization, right? Ultimately, these things they're treasuries, they're paper contracts, but it's not native issuance, right? I think that's kind of what's missing here, is that we still have this disconnect between the real paper contract world where all of these things are housed and where they're originated, and then the digital on-chain world where they're after they've been tokenized. And when at least when I think about Secretary Bessent talking about 3 trillion in stable coins and really embracing this industry, it feels like we need to move the origination process more on-chain. Like we have to natively have fungibility or some semblance of issuance or origination natively on chain, so that is the first pass at the asset. If we want to go and take it into a paper contract for some reason, maybe we can do that as a secondary rather than the other way around. We issue it off chain and then the secondary is on chain.
Yeah, I think that that's really well said, and I have like a theory about this that I call like the net worth theory, which is depending on how much of someone's net worth is literally on chain versus like in a classical like 401k or like a bank account or whatever, they will prefer to hold their US dollar supply, like their actual USD, where the rest of their net worth is. Yeah. So like if you're traditional financial, like I don't know, like a boomer or something, you have most of your like retirement account stuff in like Schwab or whatever, it is a pain to move this way, into the on-chain world, because everything you're interacting with, like the dividends you're getting, or if you want to make a new investment, or like your like financial advisor or whatever they these days, right? They call you and they don't even understand this thing right over here. And if most of your net worth is on chain, whatever tokens it is, it doesn't matter, right? It's Bitcoin or something else, or DeFi or whatever, Solana meme coins, you will want to hold the dollars that it makes up the rest of your net worth on chain. You would prefer, it's actually worse for you, other than spending for like consumer items and merchants and stuff, to hold anything off chain. And so my view is, over the next 5 years, as you said, with Secretary Bessent's like, I guess, estimates of 3 trillion stable coins, is the more people's net worth in everything else comes on chain with like RWA issuance and all of this stuff, the more people will actually want to prefer to hold digital dollars, stable coins, as the remaining amount of dollars of their net worth. And the other side will be more inconvenient, right? Like right now, everyone asks, oh, why should I use stable coins when we have bank accounts or Venmo and stuff? It'll actually become the other way. And the critical causal factor is, where is your net worth? That's my theory. My view on this stuff is like, if your net worth is on chain, you'll prefer to hold your dollars on chain and then just spend them through these new innovations, like these spending cards, like EtherFi, Pay, all of these things. And if it's off chain, it is inconvenient to bring it on chain. And so what we're doing at like Frax is we're looking at where are the new places where like people's net worths are going to come online, like tokenized equities, these kind of things, and then making sure that the preferred stable coin kind of and DeFi ecosystem around these places is Frax USD and Frax and stuff. So that's why we've actually started working with so many institutions and like RWA issuers, not just as like infrastructure for like Frax USD, but because I think the next frontier in the next like couple of years is that these people's net worths will come on chain. They're going to want to actually hold genuinely most of their dollars on chain as a other part of their net worth. And so we want to make sure that we're the best functional for those people.
I think that's extremely well said. We're seeing this generational transfer of wealth from the boomers all the way down to the zoomers. People are learning about finance more in their adolescence because we all have access to the internet. We have access to these internet native financial applications. Sam, thank you so much for coming on, man. I always appreciate your insights. I think, you are really particular about when it comes to the market structure, especially with stablecoins, but then also have a capability of zooming out and looking at the bigger picture. So I really do appreciate it. And yeah, thanks for the wise words. I think everyone in the stablecoin world and industry these days can learn from you and your takes.
Thanks, Robbie. Always a pleasure to be on. Catch you next time.
See you soon. Thanks, Sam. All right. Amazing. Sam, great guy, super nice guy, super smart guy. We are going to talk to another Sam here coming up very soon. Very soon. We're just going to make sure that we got everything correct. And we're going to get our next Sam, the CEO of BitDigital, up on the show. So let's do that. Let's get him up on the show. I think Sam from Frax had a bunch of good takes. Obviously, it's such a hectic weekend. We're going to get Sam from BitDigital up to talk everything about Ethereum. The DAT trade is happening. And we're going to have Sam, the CEO of BitDigital, one of the leading Ethereum treasury companies, up. He is up there with the likes of Tom Lee and Bitminer, Joe Lubin and SBET. This is Sam of BitDigital. Welcome back to the Rollup. We are here with Sam Tabbar. Very excited for this conversation. There's been a ton of turbulence in the markets over the last week. Trump said the T word. We heard the word tariff, and all of a sudden everyone went into a tizzy. But really, Bitcoin and ETH kind of held up quite nicely. So we're going to be talking about ETH today, and we're going to be talking about BitDigital, which is a digital asset treasury company, publicly traded and ETH powered. Sam Tabbar, you are the CEO of BitDigital. Welcome to the show.
Thanks for having me. And yes, there's been a lot of price action in the markets lately. last Friday was considered a very difficult day in the markets, and now it seems like a distant memory. Having said that, our stock performed remarkably well. I think one of the best DAT performances on that very terrible day, and there are reasons for that. We can get into that later today.
Yeah, happy to. Before we get into that particular day's occurrences, I'd love a little bit of a broader thesis as to why you chose to use ETH as the primary asset in this vehicle. First, maybe we could get into your background, and then we'll ultimately work our way into how you found Ethereum and then ended up leading BitDigital.
Yeah, some brief words about my background. I started my career as an attorney, as a lawyer for a law firm called 𝘗𝘂𝘏𝘗𝘠 in New York City. I moved on to help create a Japanese hedge fund in Japan. I did that for a number of years. That was a lot of fun. Worked out really well. Then Bank of America Merrill Lynch asked me to run their capital strategy, which I did. After that, during that time, I read about Bitcoin. At that time, Bitcoin was primarily used for nefarious purposes. Silk Road was a thing, but it was a very interesting situation where people could use money that's not printed by the government, and that was a very novel concept. But what moved me mostly was Ethereum, because that had some technology that we can get into. But suffice to say, Ethereum had the ability to rewrite the entire financial system, and it's doing that now. And when I read about Ethereum, I was very excited, and I co-founded an Ethereum company called Fluidity. We created something called AirSwap. It was a decentralized exchange. We also tokenized Manhattan real estate. That became a landmark study in the Harvard Business Review. And I had some pretty good backers, like Michael Novogratz, who's the CEO of Galaxy. He backed my Ethereum company. So did 𝘗𝘁𝘁𝘁, the co-founder of Ethereum. He was also a massive shareholder of my company. We did end up selling Fluidity to ConsenSys. ConsenSys is the largest Ethereum software developer in the world. And 𝘗𝘁𝘁𝘁 heads that, and he was very happy with that acquisition, and all my shareholders made money, which is saying a lot, because in crypto, not everybody makes money. There are lots of winners and there are lots of losers, and there are not so many winners, but there are a lot of losers. So I was really fortunate to make sure that all my shareholders made a handsome return. And then I ended up joining BitDigital as an executive. It was a Bitcoin mining company when I joined it. It's listed on NASDAQ. The ticker is BTBT. And we were, at the time, about 5 years ago, when we were a Bitcoin miner, we noticed that all our entire fleet was in China. And we thought, you know what, that is a jurisdictional risk. As great as and as profitable as this business is at the time, this was 5 years ago, we should really move the entire fleet out of China and bring it to North America. And we did that. And that was quite a feat, because we did that during COVID. And there were some, if you recall, some very challenging supply logistics going on globally in the world. And so when we took tens and tens of thousands of machines, and we airlifted them and put them on boats from China, and they traveled around the world, and we had them powered up in North America and Canada and the United States. And we did that for a while. And then I realized, Bitcoin's great, but I realized that the business of Bitcoin mining is not a good business. It's a hamster wheel in many ways. You just have to constantly buy new machines. You have to dilute shareholders in order to raise capital to buy those machines. Taking on debt to buy new machines is a bad idea, because you cannot predict the future cash flow of the business. So you can't really service the debt responsibly. Bitcoin's all over the place. And so you don't know how much money you're going to be making in the next month when it comes to Bitcoin mining. So if you take on debt, that's a very risky proposition. Those who take on debt when it comes to Bitcoin mining, that really ends in tears. So, in order to raise capital responsibly, you could only dilute existing shareholders, which also sucks. And you're just buying these machines that end up becoming very expensive paperweights after a few months. And then there's something called a halving in Bitcoin, and that happens every 4 years. And essentially, what ends up happening in the halving in Bitcoin is that it divides the profits of Bitcoin miners in half. So basically, it's a business where you're in the hamster wheel of just buying new machines, diluting shareholders, and the business profits just cut in half every 4 years. And politically, people don't like the fact that it takes so much energy. So it just became a business that I was really disenchanted with. And I was the first one in the entire sector to say, this business actually sucks. We're going to start putting Ethereum on the balance sheet, and we're going to start positioning to become the MSTR of Ethereum. And when I did that, I was throwing a lot of tomatoes, metaphorically speaking. A lot of people were Bitcoin maxis at the time, and if you mentioned the word Ethereum, it was like a bad odor. People just did not like that. They would just say, "Oh, that's a shit coin. What are you doing?" And then I had dinner with Michael Saylor, and he said, Bitcoin mining is actually a really bad business. And I said, you know what, I totally agree, and we're trying to get out of it. He goes, why don't you just do what we're doing, which is just buy Bitcoin, put it on your balance sheet, just be like a mini MSTR. And I said, that's a great idea, except I want to do it with Ethereum. And that was not a good conversation at that point.
How did Michael Saylor react when you told him, "Oh, we want to be a mini MSTR, but we want to do it with Ethereum"?
He said, that's a bad idea. Ethereum is going to end up going to zero, and the vibe just died in the room, and the conversation sort of went south, and I left the boardroom. So he was, but he ended up being wrong. Ethereum did not go to zero. It actually ended up doing extremely well over the past couple of years, and it's begun to outpace Bitcoin for good reason. And there are lots of reasons why Ethereum is outpacing Bitcoin, and there's a lot of reasons why there's a lot of positive price action around Ethereum. We can get into that today. So now we become this Ethereum DAT, as they call it. But wait, there's more. We had a very successful AI business, one of our subsidiaries at Bitcoin, at BitDigital, and we called that subsidiary 𝘬𝘬𝘮𝘬. It was such a successful business that we decided to IPO it, and we did that just about 2 months ago. And that was a very successful IPO. It's up well over 100% over the past couple of months.
Congratulations!
And thank you. And BitDigital owns 71% of 𝘬𝘬𝘮𝘬, and that's an AI business. So BitDigital is now the only public company in the world that I'm aware of that has exposure to the two largest and most impactful story arcs of our time, which is digital assets, which is Ethereum, and artificial intelligence, which is 𝘬𝘬𝘮𝘬 for us. So now today, if you go on the BitDigital website, you'll see on the homepage that BitDigital is just 2 line items. It's Ethereum on the balance sheet and the amount of 𝘬𝘬𝘮𝘬 that we own, which is 71.5%. And it's very easy to value. The market values Ethereum minute by minute, second by second, and the market values 𝘬𝘬𝘮𝘬𝘮. It's a listed company on NASDAQ. So we're an extremely easy company to value. That's just 2 line items. And so I'm very happy to be a part of a company that had the foresight to have this double-pronged approach on digital assets, namely Ethereum and artificial intelligence. And by that, I mean data centers that are built to power artificial intelligence, which is what 𝘬𝘬𝘮𝘬𝘬𝘮 does. So that's what BitDigital is. And there's a reason why we've been outpacing a lot of the digital asset treasuries recently from a market valuation perspective. It's because we have a very creative approach when it comes to the capital structure. I can get into that in a moment. But also, we own 71% of 𝘬𝘓𝘓, which is doing extraordinarily well. And so that has a cascade effect on the valuation of BitDigital. And we're the only ones that actually own a real business. If you look at the Ethereum DAT space, they're all shells. They were shells. They were basically kind of, frankly, failed businesses, and they were repurposed into buying a bunch of Ethereum and putting on the balance sheet. That's very different for us. We have a very successful business. We own that business. We IPO'd it, and we have a whole bunch of Ethereum on the balance sheet. So that's that.
It's really funny to see some of the as you call them, failed businesses that essentially got a way out of a business that was dropping as a means of exiting to some crypto founders that were looking to just use the shell and the ticker that was on publicly traded exchange.
Right.
Not the case for you guys. Very different
Yes.
case.
Very.
Given the history in Bitcoin mining and allowing the infrastructure to then segue into AI and 𝘬𝘓𝘓, which, as you said, is doing quite well. You guys have over 27 million shares, it's trading at about $34. And like you said, 71% of that company is owned by BitDigital. I'm curious, and I'd love to get into some of the things that you mentioned in there. There were some Easter eggs about why Ethereum's doing so well, what the capital structure is for BitDigital with respect to Ethereum. But maybe I want to start just a little bit higher level. You've got this AI company, and then you've got Ethereum. These are the two line items. Ethereum is so broad. It's so diverse. There's so many builders and different applications that are all being built with Ethereum. AI is one of them. And I'm just curious, even if you're projecting out 6 months, a year, 5 years, do you foresee any interplay between 𝘬𝘓𝘓 and Ethereum? Do you see 𝘬𝘓𝘓 selling compute on Ethereum? Maybe you could just tell us a little bit more about 𝘬𝘓𝘓, and it'd be fun just to think about what kind of interactions it could have with Ethereum.
Yeah, I mean, there's a lot of speculation on how AI and Ethereum will intersect. I imagine they will. There are lots of theories on how they can. The way they intersect currently is that they're both expressed in a public vehicle called BitDigital. There's no public vehicle that has that kind of expression. With respect to 𝘬𝘓𝘓𝘓, the AI company that we own on the balance sheet, that is primarily a company that basically it builds data centers, and it builds data centers in a very unique way. Data centers, and it's basically just bringing a bunch of HPC servicing cloud clients that are focused on AI. And what we do very differently is that we find these abandoned facilities that were left for dead, like manufacturing facilities, mattress factories, and so on, and we repurpose them into tier 3 data centers. Tier 3 is one of the top levels when it comes to building a data center. So, for example, we bought a mattress factory last February, and we souped it up. Now it's a top tier data center. We just finished it very recently, and we did that in record time in 6 months. Normally, when you build a data center for AI, it takes about 2 years. But the way we do it, it takes about 6 months. And the reason for that is we have this retrofit model approach. We have this skill set where we're able to retrofit a facility that's been left basically abandoned. We take the existing power in that facility, we use that power, we leverage that power, and we have this retrofit model where we build a box within a box of that facility, and we're able to have a top level data center to service AI clients. And so that's been really a fun, that's one of the reasons why 𝘬𝘓𝘓𝘓 is doing very well. The market is realizing that there's a real need to build data centers quickly, and we've been able to crack that formula. And so that is our play in artificial intelligence. And that's one of the reasons why the stock is just doing extremely well. And that, again, has a cascade effect on BitDigital. So that's a little bit about 𝘬𝘓𝘓𝘓. But your question about how Ethereum and artificial intelligence will intersect, I mean, I don't know where to begin. It's the world is going to be very different in 5 years. We will not really recognize it. And I truly do believe that Ethereum will rewrite the financial system. And I really do believe that artificial intelligence will rewrite society. It's already happening. And to think that's not happening is really, I bid you good luck to you. So it's basically a world that we need to prepare for. It's a world that's arriving really quickly. I think it's already here, and it's very difficult, frankly, to answer your question on how Ethereum and smart contracts could play a role in AI. One theory that's come up that Tom Lee, actually, I have to give him credit, it wasn't from me. He mentioned that perhaps, I don't want to mess it up, but he said that perhaps there could be a way for AI agents to be their identity to be validated on the Ethereum blockchain, so that we know exactly who you're dealing with when it comes to AI agents, and that be validated on a blockchain such as Ethereum. That makes sense. That's just one example of I'm sure a ton of examples. I just want to mention, it's such a difficult question to answer, because if somebody asked me, hey, what do you think the internet is going to be looking like? And you asked me that question back in 1998, and I remember that year. Unfortunately, I am a little bit. I'm 52 now, so I remember the internet when it was invented and the whole process. No one would have ever imagined Uber. No one would have ever imagined, dating apps like Tinder. No one would have ever imagined the internet giving out these apps that you find today. So it's just really difficult to know how Ethereum and AI is going to intersect. They're going to intersect, and they're going to do it in ways that we can't even imagine today. Very similar to how the internet in the 90s, we couldn't imagine what it would produce, such as, again, apps like Uber and so on.
Yeah. And you mentioned the capabilities here and how these are both some of the most prominent emerging technologies and digital assets with respect to Ethereum, white fibers, pioneering AI and data centers, and empowering this movement. Yep. And you're right, there's some key tenets with Ethereum that could make AI a lot better. And these could really start to work together. The censorship resistance is something that we think a lot about. We hear a lot about with Ethereum. And ultimately, it could really strengthen AI and make sure that the open source movement and the AI movement work together. And these really work together for the benefit of humans and society. And it doesn't get closed off or black boxed or just monopolized by a few big winners that ultimately take advantage of all the rest. And
I couldn't agree with you more. I mean, there's really a fight between light and dark right now when it comes to that particular issue. I'm very much against censorship of all kinds. I'm in many ways a free speech absolutist, and if there's technologies where we can resist the government's posture to squash freedoms, particularly in relation to freedom of expression, I'm all for it.
Yeah,
I'm against. Rather, I'm against that, and I'm all for it. Right.
Understood. Yeah, and Ethereum's got this code is law philosophy to it, which is just is really, really impressive. I'd love to think and talk a little bit more about the capital structure that you have, and maybe we can start from the beginning, because you mentioned a piece of your lore, your background that I wasn't too familiar with. It was Morgan Stanley, Bank of America coming to you and asking you to run their capital strategy. And so I'm just curious.
Merrill Lynch,
or excuse me, Merrill Lynch. And so I'm curious, what was it like running capital strategy there? And then maybe the segue here is, you heard about Ethereum. When you're working in what we call traditional finance and you're running one of the largest institutions in that world, and then you hear about this alternative system, this alternative money that feels so far away, and it was very, very early, and it was being used for nefarious purposes. did you write it off completely, or was there
No.
kind of a kernel in your mind? What generally, how did
Absolutely.
you balance these two worlds when you were there?
There was certainly a kernel. So look, I was a lawyer, and then I became a banker, and I realized that the system is rigged. The financial system thrives on friction, unnecessary friction. Whenever a person wants to transfer value to the other person, a lawyer and a banker gets involved. Contracts, bank accounts, the fees to transfer it, and so on, escrow agents, just a whole bunch of middlemen. And what Ethereum does is gets rid of all the middlemen. It solves for escrow. Like you said, code is law. You don't need lawyers. You have smart contracts. You don't need bank accounts. It goes from one wallet to the other. You don't need escrow agents because you have something called an atomic swap, which makes an automatic transfer when certain conditions are met, which is one of the beautiful things about Ethereum. So that kind of technology, when I read about it, I realized that my profession as a lawyer and a banker is just going to be made redundant. And, I would strongly encourage people not to go into law school. Young people, they should not be lawyers. They should not be bankers, because all of that is going to be code. And Ethereum is leading the pack on that.
Wow. I think that's also true of AI. And you mentioned that, the people that are getting caught flat-footed, good luck to you. If you don't think AI is going to come in and innovate your industry, best of luck. Same thing with digital assets coming in. Like you said, lawyers, bankers, ultimately software is eating this world. And so you realized this even early on, and therefore you were able to prepare and ultimately accept.
Not only did I realize this, I co-founded an Ethereum company back in 2017, 16 or 17, which were early days. A lot of people are getting on the bandwagon of Ethereum now, but I co-founded an Ethereum company, and we hired engineers, and we built on the Ethereum blockchain. And that was a successful company. And I sold that company to the co-founder of Ethereum, 𝘗𝘓𝗏. So yeah,
it was difficult to do back then. In 2017, a lot of the infrastructure that we have today was not available.
Oh, absolutely. It was very difficult to do back then. But it was when it was a very difficult time for Ethereum, when Gary Gensler was the SEC chairman. During that era, as you may know, Mr. Gensler had this bee in his bonnet about Ethereum, and he couldn't even decide. We made it unclear, I think it was on purpose, whether Ethereum was a security or commodity. He would not give any clarity on that. He would go after so many developers on the Ethereum ecosystem. He would investigate a whole bunch of projects. I had developer friends who were afraid to write code on Ethereum because they didn't want to go to jail, because Gary Gensler was just going after everybody on the Ethereum blockchain. That era is now over. Gary Gensler has been put out to pasture, and now you see a very friendly SEC chairman, a very friendly political administration. Of course, there's nothing perfect about that political administration or any other political administration, but when it comes to crypto and Ethereum, this is a pretty friendly political administration. And so we live in a very different era, but there was a reason why Ethereum was not doing very well back then, is because it was not classified as a commodity like Bitcoin was. And so when it comes to a commodity, you're allowed legally to champion the commodity, talk about the price of the commodity, make predictions about the price of the commodity. There's a very different set of rules when it comes to commodity, and Bitcoin was a commodity. Ethereum was not clear, and Gary Gensler did not make it clear on purpose. So there couldn't be anybody there were no Michael Saylor types in the Ethereum ecosystem, because we were not sure if Ethereum was going to be classified as a security. If you champion a security, if you make price predictions on a security, you can go to jail. And so that is why there was no positive price action on Ethereum. There are two reasons. There are no champions of Ethereum because you could not really talk about a security. And secondly, developers were afraid of writing code on Ethereum because Gary Gensler was investigating everybody on the Ethereum blockchain for silly reasons. Those reasons are now gone. You see people like myself and Tom Lee and 𝘗𝘠𝗦𝘧𝗬𝘏. We were just in Singapore just a couple of weeks ago on a panel. Thousands of people showed up, and we're all talking about, Ethereum and why that is the blockchain of choice. We're not really able to do that during the days of 𝘗𝘬𝘮𝘬𝘪. And now you have a whole bunch of developers who are building on Ethereum with absolute freedom and not being worried that, they'll be investigated by for silly reasons by the SEC.
Yeah. So even though you, 𝘗𝘠𝘠𝘏 and Tom Lee all have your own Ethereum digital asset treasury companies, I take it you guys are all friends. You're up there. You're on panels together. 𝘗𝘠𝘠𝘏 bought your company in the early days of Ethereum. Can you just speak to the relationship that you have with these guys? Maybe, do you have any funny stories that of your interactions or your run-ins with Tom or Joe?
I do tip my hat to Joe for helping start this movement. When it comes to the public markets and how to express the Ethereum aspiration, Tom has a different approach, Joe has a different approach, I have a different approach. My approach is to use the capital structure creatively. So for an example of that is that just a couple of weeks ago, we did a convert. We raised money using a convert. We had some really great players like Kraken and so on that came and participated in our convert. And the reason why that's important is that it's unsecured debt. And no one else has done this in the Ethereum digital asset treasury ecosystem. SBET hasn't done it. Tom Lee hasn't done it. We did it. And the reason why that's important is because when there's a crypto winter, and there always is, if you have secure debt, you are securing your Ethereum, that debt that you've raised money out of. That is unsecured. So if and when Ethereum is down, what happens is that the people who participated in the convert, it just converts into equity. They don't take after Ethereum. And so that is the beauty of unsecured convert, unsecured debt. Raising money that way is really responsible, especially when there's a downturn. If you're raising money using debt that's secured, when the downturn, you may go bankrupt because the creditors are going after your Ethereum. And so that's important. That's one of the things we've done on the capital structure, to raise money without diluting shareholders and to raise it in a way where they can't come after our Ethereum should there be a crypto winter or a sudden crash like there was on Friday.
Yeah.
So that's important.
So getting into that, I'd love just to unpack that further. And this gets into the capital structure that you have with BitDigital. Maybe you could just walk us through from your perspective, what happened on Friday, and how do we pick up the pieces and move on?
Well, I think a lot of people are leveraged, and there are some people who think that Ethereum will just never go down. I believe that Ethereum has structural upside, but there's going to be a lot of cyclical gyrations up and down. And if you're leveraged, you're not going to be positioned well when the cyclical gyration goes down. And so I think it's, unfortunately, probably good for Ethereum that some of the leverage has been washed out. And I'm really hopeful that people have learned their lesson on not leveraging themselves too much. Having said that, Friday does feel like a distant time. I mean, people are already, I feel a lot of people have already starting to move on from that. Ethereum will go up, but it takes a while. And it could happen quickly, of course, but you just don't know when. And there's good reason for Ethereum to go up. We can get into that. But there's going to be cyclical gyrations. And if you're levered, you're going to be in trouble. So yeah, it's what Warren Buffett said. Stay away from, what was it? Ladies, liquor, and leverage. So,
still holds true today.
still holds true.
Before we get into the thesis for Ethereum going up, I'm curious, just to wrap up what happened over the weekend. Did you guys buy more? Was that sort of the outcome of?
I can't say. Unfortunately,
Okay.
that's not public information yet. So
Okay.
yeah.
Okay, but because you guys are public, then I guess it will be released at some time
Yes,
when quarterly
that's right.
filings and such.
That's
okay.
right.
So we will find out soon enough who had the cash on hand and who was buying more. And I do want to ask just one question, and I don't want to catch you off guard, but and then we'll get into the Ethereum bull case here. But because you mentioned Gensler, there's this thing that's been circulating over the last couple of days, and it's this article about how SBF didn't do anything wrong. Gensler used him as a scapegoat, and the Biden administration used him as a scapegoat. And now the sentiment on Twitter is, just to quote Ansem, one of the Twitter personalities here, is that Trump is going to pardon SBF. I already see the propaganda starting. From your perspective, is there anything else to be said about the Gensler SBF story? Or do you think, look, he stole money, he's in jail, let him stay in jail?
I'm not really a fan of Sam SBF, but so I don't want to defend him or say that he didn't do anything wrong or right, but I do know one thing for sure: Mr. Gary Gensler had an axe to grind with crypto, and he did everything possible to split that movement and tear that movement apart. Just as an example of how awful that time was, even BitDigital was occasionally debanked. There are banks that called us during the Gary Gensler days, and they said, we're getting heat from the certain political officials and the administration to bank Bitcoin mining companies, and they weren't very clear about it, but they made us read between the lines, and so we were told to bank elsewhere, and they had to close down our banks. I mean, we don't have that issue anymore. It's quite the opposite. But it was a pretty bad time. We also received letters from Senator Elizabeth Warren telling us that we were destroying the environment, which is not true. We were using, I think it was 98% renewables. We're using hydro and all these renewable energies to power Bitcoin. This is back a few years ago when we were a Bitcoin miner.
This is incredible. I think it's worth mentioning that a company that is fueling all this investment into an energy source, such as, whether it's wind or solar, some kind of renewable energy, is ultimately pushing that forward. You guys were actually, and it may seem counterintuitive to someone that thinks, you're using all of this energy, but you're the ones that are actively seeking out and we're soughting after this energy source and pouring money into renewable energy resources and really pushing that forward.
I'm glad you see the absurdity of it. It was a very absurd time. The political administration back then with Biden and Gary Gensler was just very anti-crypto, and they probably lost the election because of it. There are 50 million crypto holders in the United States, and the Democrats in many ways alienated that entire voting bloc, which is a very motivated voting bloc. And the Republicans took advantage of that. It was a really bad idea for the Democrats to politicize technology, and that kind of blew up in their faces. I heard that Elizabeth Warren still continues to be against crypto for the silliest reasons, but I don't think people listen to her anymore.
Yeah, I don't think so either. I think she's about due for retirement.
Yes.
Okay, let's get into
retirement. Speaking of retirement, just
sure.
We do have too many old people in the government. Frankly, we need younger people. I mean, the average age in the Senate is I think in the 70s or something crazy like that. Most of these people belong in nursing homes, not in Congress.
Yeah, and the issue here is that young people see the absurdity of the job itself and don't wish to get into a career like this. And
yes.
And okay, well, if the thought experiment goes,
and that's why young people are very disenchanted with the existing system, and that's why they are gravitated towards Ethereum and crypto and trading crypto, because they feel the existing system is entrenched and rigged for this older class, and that's why you see young people just trying to figure out an alternative system that's for them. And that's why crypto is a big deal, because for younger people, they see that as a chance to sort of even out the playing field.
I think you're absolutely right. And I think the Democrats were subservient to this this ideology, and the older people that were there, and they said to themselves, oh, crypto's for rich people. This is money. This is for rich people, and this is going to get monopolized. So therefore, us as Democrats, we don't like this thing. But they fundamentally misunderstood the fact that crypto is the alternative to the current monetary system that has been monopolized by the elitists that they're trying to prevent from getting and monopolizing power.
That's correct. You're totally right.
I think they lost the election because of ignorance.
It's true.
We'll see how this plays out in the midterms. Obviously, there's this is not a political show, but sometimes we delve. Okay, let's get into the Ethereum bull case. I think you already set the scene. We have this generational wealth transfer, money's flowing down, and people, and frankly, by large in part, as a result of the internet and the democratization and the open access to information, people learning about finance a lot younger. Saw a chart the other day. Most people that are now in retirement age, they didn't learn about money until their 30s or their 40s, and they had a true career. Now people are learning about finance in adolescence. How, with this being said, and we already framed the political environment, Ethereum as one of the emerging technologies, AI is an emerging technology. Tom Lee's been famous for his, price predictions of Ethereum to 20,000 and more. I'm curious, from your perspective, feel free, call out a number if you'd like, but you don't have to. What is the bull case for Ethereum going up over the long term, irrespective of the short term gyrations? There's a fundamental thesis here. I'm curious, how do you see the bull case for Ethereum?
Well, look, if Ethereum and Bitcoin was invented on the same day, people would never have heard of Bitcoin. And Bitcoin just had a great first mover advantage. And then when Ethereum came up, it had this technology called smart contracts. You can build DeFi applications on it. These are things you can't do with Bitcoin. Bitcoin is just basically a store of value. So what I'm trying to say here is, now that the coast is clear on Ethereum, and you're seeing, very friendly congressional acts like the Genius Act and the Clarity Act, that's, providing some clear rules around stable coins. And, the majority, if not half or more than half of stable coins, are built on Ethereum. So you're going to see a lot of development activity on Ethereum, especially with these congressional acts coming out that are providing clarity, particularly on stable coins that are built mostly on Ethereum. So you're seeing now Ethereum being unleashed because of the regulatory environment, the political environment, and Bitcoin is now taking sort of a back seat because it's just an inferior technology. I'm very grateful for Bitcoin being the mother coin, but it's not the technology that's going to change the world. It's Ethereum with its ability to rewrite what already exists in the financial system. That is a technology that only Ethereum has, with no downtime, as opposed to other blockchains, including Bitcoin.
Yeah, absolutely. And you guys have not only staked this claim, but you've also put your money where your mouth is. You transformed your business, which at the time was profitable with Bitcoin mining. But
that's right.
We
had a profitable Bitcoin mining business.
Mm-hmm.
We had a profitable business. We transformed it and made it into an Ethereum treasury company, and we IPO'd our AI business, and so we own a large part of that. So that's the position we're in now. But yeah, we knew the puck was going towards AI and Ethereum, and we made moves to position for that. And I would encourage everybody who's listening in your audience to make similar moves. Ethereum and AI is going to eat up the world, and it's just best to position for that.
Do you anticipate more Bitcoin mining companies following suit and doing the same thing you did?
I don't think any Bitcoin mining company is going to survive the next halving, which I think is in a couple of years.
Yeah, 28, I believe.
Yeah. There's almost like a 1% chance that there's going to be that many Bitcoin mining companies as there is today. Bitcoin mining companies were once really hot because they were Bitcoin proxies. They were Bitcoin proxies in the capital market. So instead of buying Bitcoin, you would buy a ticker of a Bitcoin mining company. But after a while, you had like a whole 20, 30, 40 Bitcoin mining companies. It made no sense. There was just too many proxies in the capital markets for Bitcoin. On top of that, it became a very difficult business. So I don't think Bitcoin mining is going to be a business in the future. I forgot your question. I apologize.
You answered it. Essentially, if Bitcoin mining companies are going to start to turn off their machines and quit mining because it is no longer profitable.
I certainly think so. They're either going to go into the data center play like what 𝘬𝘬𝘬𝘬𝘬𝘬𝘬 did, or they'll be a treasury company. That's already happening, by the way. That's happening in a very large way. Most Bitcoin companies have already announced their intention to pivot into AI or become a treasury company.
Kudos to you.
We were the first ones to do that a couple of years ago, and that was not received well by the markets at the time.
But now you guys are the ones with the first mover advantage.
In some ways.
I got another headline here, just kind of fresh off the wire. It's your friend Tom just said today that the DAT bubble has burst. I'm just curious if if you agree with that first off, and then if you do, what does the future of capital formation at an institutional scale for Ethereum? What does it look like if the DAT bubble has in fact burst?
Well, that's why I'm very comforted that we own a very real and thriving business. That's fairly important. And so we have a way of hedging ourselves to any bubble bursts. And that's why last Friday, when the markets crashed, feel free to look at our stock price. It did very well. And so that is a unique position that BitDigital is in. I am not an ETH maxi. I'm a shareholder maxi. I look at the price more closely and what we can do to provide value to the share price as opposed to gathering Ethereum. But I do think that Ethereum is going to be worth much more in the future than it is today, and that's one of the reasons why we're buying Ethereum. But we're doing it in a way that's responsible and maximizes shareholder value. And if you look at the share price performance, you'll find if you look at it past week, month, the past 3 months, I think we've done pretty well.
I'd say so. And I've got the dashboard up. This is a great dashboard. It's updating in real time as we're having this conversation. We started off the day. Right now, NAV per share is 430. And I did check before our conversation started. It was at about an 11% discount. We're already closing that back up to 8. We're at an 8% discount now. So I'm just curious about the capital structure here and kind of the mechanism. When you do find that you're trading at a discount to NAV, are you using cash to buy the shares, or maybe you can just talk about what dominoes do you put into place to ultimately close that gap and let the market resurface?
Well, one of the things we did was we did this convert where it converts to, I think, $4.16, which is a big premium to MNAV, to where our share price was when we did the convert. So that is one of the creative things that we've done with the capital structure to keep buying, to position well the company when it comes to raising money, and not necessarily just using the one lever, which many people use, which is just diluting existing shareholders.
Got it. And I think I've only got maybe one or two more questions. This has been a really, really insightful pod. When you're, sitting on the ETH that you've got, and it's 150,000 Ethereum that I see on the dashboard here, it's upwards of $600 million. How are you deploying this capital to compound some of this Ethereum? Are you putting it into DeFi? Are you lending it? Are you staking it? How are you already compounding the Ethereum stack that you do have to, again, just maximize Ethereum per share further?
Yeah, we're just simply doing plain vanilla staking, at 3% yield. But we are staking about more than 80% of the Ethereum on our balance sheet is being staked. And that 3% is spitting off is enough to include cover the G&A of the company. Running an Ethereum that is remarkably not expensive. It's a very expensive business to run, which is one of the reasons why it's very attractive. Unlike Bitcoin mining, that is a very, very expensive business to run. Bitcoin mining you got to get a data center, you got to buy machines, you have to have power contracts, your machines are outdated in months, you've got to buy new machines, you have to deal with Bitcoin going up and down, and you making sure that everything is all connected. It's a very expensive and complicated business. The Ethereum DAT business, very simple. Buy Ethereum in the open market, stake it. You can't even stake Bitcoin, so you're not getting a yield, right? So you could stake Ethereum, and you could use that stake to cover your very, feather light expenses when it comes to buying, when it comes to running an Ethereum DAT versus a Bitcoin mining company.
Yeah, incredible. Sam, we've only got a few minutes left here. I'm just curious, some takeaways from the Asia conference tour. You were up there, with the other big digital asset treasury companies, having the important conversations on the main stage. What were some of the takeaways? What was the the sense in the room? Anything that you pulled out that stuck with you while you were out there?
Well, first of all, there were 25,000 people at that conference. I was really surprised by the scale and volume of people. And when Tom and Joe and I spoke at the main stage, there were thousands of people that showed up, and there are people like camping out on the aisles. I was very surprised by the reception, the excitement of what we do. And, I think that crypto has a very bright future. That Singapore conference, I think it's one of the largest, if not the largest, crypto conference in the world. And I was just very encouraged and it just confirmed that I was on the right path. And it was just so great to see all this excitement from the media, from people, from people who are just getting into it, who are curious and are just disenchanted with the existing financial system and wanting a shot at a fairer system, or a system that's being developed right now. That's found in this movement. It's a counter establishment movement, and I'm glad that I'm in it, and I'm glad you guys are in it too.
Yeah, we certainly are. Sam, thank you so much for joining. It was an absolute pleasure, and I think we share a lot of the same philosophies, especially when it comes to this movement. Would love to have you on again sometime soon.
Thanks for having me.
That last segment was presented by Wrecked. Don't get wrecked. Shout out our friends over at Wrecked, OSF, doing a great job. I love seeing a nice hardware, if you want to call it drinks hardware. Just like the idea that there's creative opportunities here in crypto. We don't just have to be launching the next fork of an L1 and dumping on retail with a low float, high FDV. I will shamelessly plug Wrecked because, look, they sent us some drinks, and I like the drinks. Just like NFTs. It's like a physical NFT. Got nothing against the guys. We're going to get our next guest up in here. having a party. We're bouncing a little bit in the markets today, which is good to see. So we're going to get our next guest, Mr. Alex G from ZKsync, coming up in just a little bit. Let's make sure that we get the correct titles going. We've already had Sam from Frax coming on. We're going to get Alex G, the OG from ZKsync, coming on. Hey, let's get Alex up on the stage as he should be. And we're gonna talk about all of the exciting things that are happening on ZKsync. I believe Alex is out at Digital Asset Summit in London. Let's bring him up on stage so that he can tell us all about the announcements that he has shared with us and the community over the last few days. Alex is not up yet. Guys, let's get him up here. He's got so much to share. There's alpha waiting. There he is. Alex, welcome to the show. Good to have you, man. It's been a little while, but I feel like, man, every time we chat, it's always a good time. We did see each other in Korea. Thank you for helping to throw an amazing event. It was great. Had a good conversation as well about some of the core ethos behind ZKsync and our industry as a whole. And now you're just continuing the conference circuit. I'm back. I'm cozy. I'm in Florida, but you are. Is it Digital Asset Summit London? Is that where you shared your most recent announcement?
That's correct. We're here in London. It was a fantastic conference, and we have a lot to share, so happy to talk.
Beautiful. Well, let's get into it, man. You guys have been the home of RWAs. Would love to understand what the latest announcement is and how it helps push that initiative forward.
Sure. So what we unveiled this week is the Previdium Industry Initiative, which is a culmination of a series of workshops we've held with over 30 global institutions, from finance to banking to, with some of the largest names, Deutsche Bank, Bundesbank, Société Générale, Bank of France, a couple of central banks, MasterCard, Fidelity International, like lots of big names, observing how Previdiums can change the world of traditional finance, of banking, how they can help accelerate the adoption of blockchains. And it culminated with a white paper, which is available on our website, on our Twitter accounts. I highly encourage everyone to read it. It's very high quality. It's made in cooperation with Deloitte. And what's really interesting about it is it's for the first time, the banking industry actually gets the technological architecture that solves a very big dilemma. So maybe I'll start zooming out to get to a bigger picture. The financial institutions today are facing a mounting pressure from their user base, from their customers, to upgrade to new rates. So the pressure is so high that I would characterize it essentially as the adopt or die moment for institutions. The customers want faster settlement. They want a lot more flexibility. They don't want to wait 2 days anymore. They want to be able to send funds anytime, on Saturday, on holidays, between the different countries, different subsidiaries, different companies. And the traditional rails cannot fulfill these requirements, and the competition from blockchain is growing. Blockchain systems are offering this, and the banks, financial institutions understand that if they don't change now and embrace these technologies, it might be too late. They will be left behind and won't be in this high demand anymore. And they have been realizing this for the last couple of years. There have been numerous attempts to embrace blockchain technologies in banking and financial institutions, and they failed for a big fundamental reason. The blockchain space has essentially bifurcated into two completely separate design environments. We have public blockchains that have verifiability, which enables true credible neutrality, which is enforced not by trust in some middleman, but by the properties of the protocols themselves. And these public blockchains have composability and interoperability. So those are open spaces where everyone can talk to each other. It's really easy to build new stuff, to connect, to build on top of existing protocols. They are really the forefront of the innovation in the public in this new digital economy. The problem is they come with a series of disadvantages that make the institutions that conflict with the requirements that the institutions have on the business side, and more importantly, on the regulatory side. The key properties that public blockchains are missing are the privacy, which is a non-negotiable requirement from the regulation to the basic common sense. Like the real world businesses cannot afford to publish all of their transactions, all of their customer data, completely broadcasting this to the entire world. And the second really big problem there is lack of control. So we love open blockchain space, permissionless systems, the ability for anyone to start using them. The institutions cannot really jump on this as of today immediately. They have their legal requirements on KYC. They need control over their systems. Sometimes they need to keep the data in certain jurisdictions. So they lack this control, privacy, and the ability to meet the compliance requirements. And they have experimented with private blockchains for the last couple of years. Those failed because they were lacking connectivity and openness of the public systems. And what this Previdium initiative is about, it's demonstration of Previdium as the new type of architecture enabled uniquely by zero-knowledge proofs that bridges for the first time the gap between these two realms. You can have now private blockchains that are connected to each other and connected to public systems, and yet they preserve the privacy and they give full enterprise grade control to the institutions and companies and organizations that are using them. And this is really what the announcement was about, building on top of the previous announcement, which we shared a week earlier, the Atlas upgrade of the ZK stack, which brought institutional grade performance by integrating Airbender, our proof system, which is today, to the best of my knowledge, the fastest proof system, fastest open source RISC-V prover and ZKVM in the world, which gives you very low transaction costs, a fraction of a cent, I think 0.01 cent per simple stablecoin transfer, up to 15,000 TPS, which is double the annualized average Visa load, and very, very importantly, 1 second ZK finality, which enables this connectivity between the Previdiums in a private way, preserving privacy not just by individual chains, but also the privacy of these interactions.
And this is huge because we've gone through these ebbs and flows, and you've been around long enough to remember these transitions throughout history when it comes to the adoption curves of crypto and blockchain. And we had Bitcoin, and then Bitcoin crashed, and we said, okay, well, blockchain is good, but not Bitcoin. And that kind of kicked off this 2018, 2019 era of all L1s, EOS, and stellar lumens, and all of these things as a means of creating these permission chains. It also kind of led to the experimentation phase from JP Morgan, some of the internal incubated consortium chains, Hyperledger and DTCC. These guys have started to experiment, and it wasn't until 2020 and 2021 that we really started to see public activity on public blockchains take off and almost hit this inflection point where, and you pointed to this in kind of your opening remarks, where it is more of a risk to these institutions to not come on chain. It's the adapt or die moment. I think you put it really, really well. And for so long, it was like, okay, well, we want them on chain, but it's important that they're on a public ledger so that everything is composable. And we have open access to these financial systems. Those things were fundamentally at odds. We didn't have the ability to give regulatory clarity and privacy and all the things that institutions expect, but also tap into liquidity and composability on public ledgers. That is now solved. Previdiums, and I take it Previdium is kind of like a take on like an Optimium. It's almost like this new flavor of blockchain where and the prefix is clear. It's privacy, but you also get the capabilities and the functionality of what we've come to expect in an open Ethereum landscape. These are some of the characteristics that you've now taken into an account. And I want to understand a little bit about how you took this from an idea into reality. Was this something that, you know, when you're having the conversations with central banks and Fidelity and you know, Deutsche Bank and all of these institutions, is this something that they're telling you that they need? Are they voicing, oh, look, we want to do this, but we can't give up on privacy. We can't compromise on scale. It won't ever work. What were you hearing? And then ultimately you put this into practice. Is this something that they told you that they need? Or is this something that now is out of the box and you're going to go and you're going to sell it to these institutions?
Yes, we're talking to a large number of enterprise customers, and what we hear is what I said. It's not that they want to change themselves. There is a mounting pressure from their customer base. Their customers come to them and say, "We want the systems. We want you to offer service on a whole different level. Like our business does not stop. We need 24/7. We need not T plus 2 days, but T plus 2 seconds." And they are, these institutions, I would put them on a spectrum from the fastest moving to the slower moving adopters, like the early majority, the late laggers, but they are all interested. So some of them will be faster than the others because they are more agile. They can afford to move faster. Some of them will take probably several years because they are a large, or large organizations with a lot of committees, a lot of politics also going on internally. But eventually, everyone will have to embrace these technologies because the pressure is coming from their customers, not from their own curiosity.
Makes sense. I remember during our conversation in Korea, this all sounded well and good, and especially having some of these enterprise partners will help with distribution of this technology. But ultimately, they have their business. You know, maybe there's composability benefits and network effects as a result of multiple institutional businesses and enterprises all tapping into a shared layer of infrastructure, which is ZKsync. But my question to you then, and it's the same question to you now, how are you guys going to make money? Like, what is the, if you guys are giving away infrastructure and technology, and even if it gets widely adopted, what is the value accrual mechanism back to ZKsync?
Look, if every bank adopts Prevedium architecture, they do it not just for one bank, they do it for multiple subsidiaries of the bank. And sometimes it's dozens or even hundreds of subsidiaries in different countries. Even within the same country, they have different spaces. All of that is going to generate a huge load of transactions, talking from one system to another, going from the individual Prevediums to public chains, to clearing houses, to all the kind of, or to the DeFi infrastructure. And all of that is going to generate interop fees. And those fees are going to be order of magnitude lower than the interop fees that they're paying to the traditional financial connectors, and way lower than what they would have to pay to trusted third-party bridges, to liquidity providers if they were to tap into those systems. But the sheer volume of these transactions, and so we're talking about thousands, hundreds of thousands of entities that will eventually embrace it, down to individual enterprises, individual companies and startups. Stripe is serving over 1 million individual startups and companies that have accounts there. In our view, what blockchain will lead to is that each company will have their own private space in some way, shape, or form. If you think about this, public blockchains are a little like open spaces co-working. So imagine you have a town, and then WeWork comes in and opens the first open space co-working, and now everyone can go there, get a desk, and start working like with very, very low barrier of entry. And this is nice and great for individuals. This is nice for startups. But as an enterprise, you probably will, especially as a bank or some serious, more advanced scale up, you would not want to be in a completely open space, right? You might want to at least reserve rooms or even get a dedicated office space for yourself. And this is what we're going to see. Like eventually, everyone will need some private space. We might not even be calling them chains anymore. Like we could call them, I don't know, containers. Like similarly, how you have websites today. Like every company has their own website. Every company has their own private cloud. The data of the companies is not completely available to everyone. They run their private databases on AWS, Google Cloud, Azure, Baidu, whatever the services are, but they retain the privacy aspect of those systems. They have full control with granular access rights on who may see the data, who may transact with what permissions, and so on. We will see the same things replicated in the blockchain world. So we will have millions of this like Previdiums as an architectural structure, and therefore the interop alone is going to be massive. And on top of that, there will be other ways to monetize it. You know, like from cooperating with the enterprises directly, from some kind of service fees, various different ways how the value can be flowing back. I don't know yet exactly what all of those ways will be, but what I know is the ZK ecosystem is governed by the ZK token. It's the token that controls the governance and the upgradability of the infrastructure, and community has the deciding power on what this token will be. Like today, it's a governance token, but it can be upgraded to anything else. It can be upgraded to have any other type of functionality. It can be expanded with burning function, with any kind of fees that are flowing through this ecosystem. And eventually, if it becomes big, there will be a way to monetize. Like Facebook was not profitable for several dozen years, I think. And then eventually, if it's big, then somehow the way will be found. So this is the least of the concern.
Yeah, I understood. I think it is just an interesting thought experiment to understand or try to think about where the space is going, and then back into what a monetization strategy could be from that. But you're absolutely right. I've heard Sam Altman from OpenAI and ChatGPT say, you know, you guys aren't generating revenue. This is before they launched their subscriptions. How are you going to make money? And he would say, well, we're just going to build AGI, and then we're going to ask the AGI how we should make money, which I thought was a great answer. And it makes sense, especially if you're connected, you're tapping into, and you're providing all of this value. I have this philosophy of economic karma. The value will find you back when you're providing it. Ultimately, it does return.
I agree.
I'd love just to, in the last few minutes, I'd love to just kind of hear, because what you're describing, this vision that you have for this architecture on ZKsync, but it speaks to the vision that you have for the industry more broadly, is millions of Previdiums. And any company, any business, enterprise, large or small, having some control over their financial domain. And businesses by nature are all conducting business with money, and therefore, they all have some element of finance to them. And each of those have their own domain. And this calls for a very diverse multi-chain experience. And as a result of that, interop is extremely important, because even within, some large enterprise, they might have subsidiaries that all need to interop with one another. I'd love just a little bit of a refresher on the Elastic chain, the Elastic network, how and because of ZK, this is fundamentally different from how Ethereum scales. Ethereum has re-execution. It gets slower every time you add a new L2. You need, it kind of clogs up the block space. This is fundamentally different with Elastic Network and ZK. As you add more Previdiums, it should, in theory, make the system more efficient, because ZK, it has more proving capacity, more verification capacity. Could you just kind of give us a refresher on the elasticity of the network and how adding new Previdiums will benefit the entire landscape, all of the Previdiums as a whole?
I would say that adding more Previdiums will just increase the power of the network effects of the system. So we have the Metcalfe's law that says that the value of a network is proportionate to the square of the number of nodes on the network. So if you increase the number of participants 1000x, the value will increase 1,000,000x, or something along these lines. But with regard to efficiency, adding new nodes to the elastic network, adding new prevediums, new chains, public chains, private chains, doesn't matter, simply does not increase the load on any individual participant, unlike shared monolithic mega chains, where everyone has to re-execute every single transaction. So this is the beauty of the ZK proofs. You get two properties. You get the scalability, because you can recursively verify, basically you recursively produce the proofs for each chain individually, and then you aggregate them together one by one, like verifying the proofs of several chains, then the proof of proofs, then the proof of proofs, until you get a single proof, which you can put on Ethereum. Ultimately, you will be able to generate the proof of Ethereum itself. We're very close to, we already have real-time proving. If you call real-time like under 12 seconds, like under the block proof time, to me, real-time really means anything less than 1 second. That should feel instant to a human. Like you do a transaction, and within a second, the entire network converges over correctness of execution of all the transactions in the network, which can be millions or billions of transactions. And then you get a single proof, which you verify on a mobile device. And this is the ultimate end game for all of Ethereum and all of blockchains. This is what will get us to this real Internet of Value, while preserving privacy. So what's really interesting is it's paradoxically, the privacy and the interoperability is the two sides of the same coin. Because you can only get privacy with ZK proofs. If you don't have ZK proofs, consider a system that you can only see a subset of transactions that concern you. Fine. You see that someone sends you $100 or $1 million, they get correctly accrued to your account. You can verify that, but how do you know that they had the right to own this $1 million in the first place? That they did not mint it out of thin air, forge, inflating supply for the tokens, making them valueless. The only way for you to guarantee this is if someone or something guarantees the correctness of the entire system, the computational integrity, the correct execution, the correct following of all the rules that comprise the system. So either you have to trust that someone does this for you, which brings you back in the world of the old institutions that are fulfilling this function in the traditional world today. This is why we have so much regulation and compliance and oversight, because trust is expensive. It's very, very expensive to produce this trust, to create it, to oversee. A lot of players, even in traditional finance, are rogue, and they are pulling the rugs. But if you replace all of that with cryptography, with ZK proofs, with cryptographic verification that does not depend on humans, you don't trust humans anymore, you don't trust validators, you trust math, which guarantees the entire system is correct, then you can do selective disclosure and only show each participant their part of the system. But that also expands to all the other systems. And now accepting a transaction from a remote chain is as safe as performing a transaction on your own chain that is under your control, because they are running, this remote chain is running the exact same code base and exact same cryptographic proofs, circuits. So you can trust them as you would trust your own system. And this is what's so beautiful, that you can expand this network indefinitely, making it perfectly elastic, meaning like this, the capacity of the system just always follows the demand. Beautiful.
Alex, last question here is, ZKsync is closing in on $2.5 billion in RWAs. You guys are number 2 according to RWA.XYZ, just behind Ethereum mainnet. So $2.5 billion now. How do we get this to 100 billion? What's the 50x? How do we scale?
We're going into the real world economy, and we're going to be tokenizing more and more assets. It's different classes of assets are having different levels of complexity when it comes to tokenization. So private credit is the easiest to tokenize. Then comes something like stable, or maybe even stable coins and money market funds is the easiest, and private credit, which is the next wave, and then tokenized equities, and then private equities is probably next, and then public equities is most complex because it has to adhere to most regulations. But this is happening. You can listen to the executives of NASDAQ talking about this, executives of the largest US banks, European banks, Swiss banks, Singapore. We just announced the launch of the ADI chain, which is a joint venture of the IHC, one of the largest sovereign funds in the world, from Abu Dhabi, and the first Abu Dhabi bank, the largest bank in United Arab Emirates, who are launching the first digital dirham on their ZK chain, powered by ZKsync. So this is all happening. It will just take time. But now we're really, like you mentioned, that we're at an inflection point, and I fully agree. All of this has a massive catalyst in the U.S. administration and all the pro-crypto stance that we have enjoyed throughout this year, and I think it's going to accelerate from here. And all the other regulators in the world will follow suit.
I think so too.
It's just a matter of time now.
Yeah. Well, keep up the great work, Alex. It's always a pleasure having you on. I always learn something and have a new appreciation for ZK as well as ZKsync. So looking forward to talking again soon, and continuing to steward the industry forward. Thank you for all the good work.
Thank you. Really enjoyed this.
Cheers. See you next time. All right. Always a pleasure with Alex. He is one of the few founders that is as technical as he is hardworking, which is incredible because there's all kinds of things that require someone to go out and make these connections and push the industry forward. Like, here on the Rollup, I feel our mission is to educate, right? And all the founders coming on, they're teaching me things, they're teaching us things. Therefore, they're teaching you things as listeners. These guys that are going, they're educating Wall Street, they're educating traditional finance. They are just as much educating those on the fringe and those on the periphery as we are. And they are helping clear the way for projects and builders as a whole. So always a pleasure to speak with Alex and smart founders such as himself. We're going to keep moving along. Let's see. Our next guest is 𝗏𝗏𝗏𝗏, who leads growth over at Monad. 𝗏𝗏𝘃𝗏𝗏. Everyone loves Monad. We're going to get him up in just a little bit. Very exciting times over at Monad. I think, sometimes I think that teams do this on purpose where they they have such a rush to their airdrop claim that it breaks, and then they can claim, oh, we had so much demand, there was so much excitement around our airdrop, they broke our claim page. What a shame. Wow, it's just we're that popular. No, I don't think these guys did it on purpose, but that is what happened. Privy was overwhelmed by the amount of demand that Monad had for its airdrop claim. I believe your boys, Andy and myself over at the Rollup, we are poised for an airdrop, I believe. So we're gonna be talking about this. We are gonna get 𝗏𝗏𝗏𝗏 up in just a moment. 𝗏𝗏𝗏𝗏𝗏 is one of those pseudo anonymous guys we have met at conferences in the past, but we're gonna chop it up. So to the team in the back, do whatever you guys got to do. We might have to take a short break in order to get 𝗏𝗏𝗏𝗏𝗏s up. Make sure we get all of his anonymous protections in place. But let's see. We're getting fired up behind the scenes. Yeah, let's send him in. Are we ready? Leo, do you need a moment before we get him? Let's get him in here. Okay, we're going to get him up in just a moment. We're going to have some fun. We just had a pretty technical conversation with Alex G from ZKsync, which is always great. But this one with 𝗏𝗏𝗏𝗏𝗏s is going to be a good time. A little less technical than the previous one. Just give us a moment to get his profile picture loaded up. Leo, let me know if we need to go to standby, and then we're gonna ride it home. Big finale here with Tunes, head of growth over at Monad. Let's go. Let's go. He's in the back. We're gonna get him up on stage. I can see him now. All right. I think we're good. Tunes, welcome, brother. Doing well, man. I have never called you a twat, and I never will. Dude, congrats, man. Monad is real. It's alive. Okay. We're gonna work on Tunes' audio to make sure that he can spread the gospel of Monad to all of you plebs. Yeah, just give us a moment here, Tunes. We're gonna get that fixed up. In the meantime, I've just been convincing myself that Monad is real. I think there's almost like this collective hallucination that's happening, and I'm certainly part of it. I enjoyed my Monad card. That was pretty cool. I like the anime AI generated profile picture. I think it is my profile picture on one of these social apps. I think it might be the base app actually that I use, the Monad card. Pretty cool. As soon as we get the go live and the green light from our team behind the scenes here, we'll chop it up about the airdrop. When token is what we're hearing from the community. I'm sure you guys have heard that plenty as well. And we're gonna have some fun. Also, I mean, there was so much demand, so much popularity around the Monad airdrop that Privy was overwhelmed. We had Henry from Privy on the other, I think just last week. Yeah, Tunes, give us a little 1-2 test.
Hello, 𝘗𝘠𝗦𝘐𝑚onad.
𝘗𝘠𝗦𝘐, we're good. Beautiful, 𝘗𝘠𝗦𝘐 indeed. Tunes, I've been rambling here for a little while. Welcome to the show.
Thanks for having me, Robbie. Nice to chat.
Yeah, man. What's the last few days been like since you guys released this on Tuesday?
Yeah, definitely feeling microwaved right now. Very hectic, a lot of chaos. Things are breaking, things are working. People are happy, people are upset. Really just in the thick of things, and yeah, hopefully we could just do what we always do and provide some good entertainment.
Yeah. Was there any like hesitations over the weekend? Obviously, flash crash Friday. There were big market turbulations. Was there anyone internally say like, "All right, guys, maybe we shouldn't launch this checker on Tuesday"?
Definitely not. There's a misconception that I often see where there's a joke of, oh, Monad waited 700 days to launch just to like launch at the absolute worst time or whatever. Yeah, just to be clear, there's never been any sort of attempt to time anything. We've just been very patient with our wonderful dev team, solving very hard problems. So yeah, never thought twice about launching this. We launched this as soon as we can, and yeah, very happy with how things have gone so far.
I'd love to just kind of sound off on how it went. Again, significant demand, overwhelmed Privy, the third party wallet provider, through no fault of your own except building a ravenous community. So kudos on doing that. My question to you: I got a Monad card. I connected my Twitter to the airdrop checker. It seems that I'm eligible. I don't know. I didn't get a specific quantity. I don't think that's available yet. But what I did get was that my airdrop strength level is that I'm cooked. Could you just expand upon that a little bit? What am I microwaved? What does this mean?
I mean, it can't be good if you're cooked, right? Like that's not a good thing.
No. But I got a Monad card.
Yeah, I mean, we're just having fun, I think it's obviously good if you are eligible. And yeah, another component of this, I almost tweeted this, but I didn't. I was gonna tweet, I can't believe we got away with launching the checker and not giving anyone tokens, and everyone's so happy. Like, it's kind of just a quick little bait and switch. But yeah, you know, there's reveal coming up. Yeah, there's a reveal coming up.
Okay.
And yeah, I mean, we'll see. You know, it's like the job's not done yet. People have expectations, but you know, only time will tell.
Okay, so give us a sense of the timeline coming up here, and just to make sure that we have our expectations right. It's the October 28th, right? That we have the airdrop, the checker. Essentially, we won't get the tokens on the 28th, but this will kind of be the next unveiling.
Yeah, so it's a little nuanced. I'll try to explain it very clearly. So the claim opened Tuesday. The claim October 14th. The claim closes on November 3rd. So you have until November 3rd at 1300 UTC, which is also 9 a.m. New York time, to basically just connect all your stuff and, you know, kind of like lock in your entitlement to your tokens. Basically, when Monad mainnet goes live, your tokens will just kind of, they'll be there. You know what I mean? You're not going to have to like sign a transaction to get your tokens or anything like that. And then, yeah, on October 28th, there's an optional kind of pre-reveal, right? So you don't have to do it, but yeah, on October 28th, you know, if you choose to, you know, you can kind of participate and reveal your airdrop early.
Okay, and as far as these airdrop strength levels, from what we're seeing when we connect our handles and our wallets and things, can you give us any sense of, all right, like you already said that I'm cooked, I get it, right? But then these other ones are like community last. Like, what does that mean? It's so ambiguous. Can you give us any sort of hierarchy or tier list as far as like, is community last better than I'm cooked? Like, where do these things stack up?
Yeah, I think, you know, it's probably more fun if people try to figure these things out themselves and speculate.
I'm trying, dude.
I think it would be boring if we like released some official, here's exactly what everything means and how it works. I think it's supposed to be a little more vague, a little more fun. Yeah, it's also, I mean, you know, when we did Monad cards, if you read the names and descriptions we gave out, they were all, you know, little jabs, kind of like joking insults, just for kind of shock value and make the experience more fun. So yeah, whenever anyone asks me, they go, oh, I got permanent underclass. Someone asked me this in person yesterday. They go, I got permanent underclass. Is that good? Is it bad? And my answer is, I mean, obviously it's not good to be in the permanent underclass.
But you just said everyone that you've said so far has been, oh, that's not good. Oh, I'm cooked. That's not good. Permanent underclass? No, can't be good.
That's just all part of the fun, you know?
That's one thing that you guys are doing well over there. You guys are having fun. What's been the vibe like? I mean, when it's heads down, it's grinding, it's building, and it's like really just doing like hand-to-hand combat of building a community. That's one thing. But now you guys, I take it you see the light at the end of the tunnel. You're having fun. You guys with intern we had on a couple of weeks ago. What's the vibe like internally at Monad?
Yeah, for sure. I mean, vibes are high. I think when you've been a part of a team for such a long time, with like, you know, you have mission 1 of launch and then mission 2, like actually be successful. You know, it's nice to just get to the milestones, right? So being very close to launch is very exciting. I think we're all just excited. Probably, you know, nerves are high. You're naturally just nervous, stressed out, feel a lot of pressure. You're in the thick of things. So I like on the day we launched the claim, you know, it's very tough to, you know, get a pulse on what the consensus reaction is to how the launch went, because you're kind of just in the middle of it and you're stressed out and there's so much information flowing at you all at once where you can't really get a read on it, and you can't really process what just happened until maybe you get a night of sleep and wake up the next day. Additionally, yeah, we broke privy. So funny enough, you know, there was just a lot of traffic. I'm sure a lot of it was real people. I'm sure a lot of it was maybe, you know, DOS attempts or whatever, DDoS, I'm sure. But like our website, worked fine. The website never actually went down. Our systems were all clear. I think part of this, you can't really like blame Privy or say that, Privy's not good because this happened. I think any provider we would have chosen, the same exact thing would have happened. Maybe they could have done a stress test, but the thing is that if they did the stress test in this exact capacity, the same thing would have happened. And obviously why would anyone want to kind of take down their systems? So yeah, it was very chaotic because we all get in the war room, 9 a.m. launch, and within 30 seconds, okay, it's down. And we're like, all right, great. Well, I guess we're just on standby.
I picture like you've seen that picture. It's Obama sitting in the chair, and it's Bush, and it's Hillary Clinton in the back, looking all official. Like you got 𝘬𝘳𝘺𝘃 sitting down. Like that is the image that I have of the war room, 9 a.m. in New York, launching the airdrop checker for Monad.
Very, very fun. And then so probably first 2 hours it was down. It went back up maybe at 10:45. And then it was a big wave of emotion of people finding out if they're eligible or not. You have a lot of people who weren't eligible, who were upset. You had people who were eligible that were happy. You had people who were eligible and were happy that other people weren't eligible. And so there's a lot of dynamics, a lot of emotions. And then as intended, as this was designed, people started really sharing their, these cards that you're talking about, kind of flexing them, shock value, comparing, trying to figure out what does this all mean. And then the timeline just started to be infected with everyone sharing their claim strengths. That's what I thought was going to happen at 9:02, but it was just a delayed gradual rollout. And then by the end of the day, it was all just, felt a lot better.
You guys have this intel lockdown. There's like an internal department at Monad, like the Monad Intelligence Agency, the MIA. And it's like, there's no leaks. There's no one that has no whistleblowers internally that have leaked the strength of these levels. You guys really have tight lips and have built this in such a way that has really been locked down, and it's cool to see because it just hypes up something, and it ultimately leads to this explosion of emotion and excitement, like you were talking about. And Pete, like the community's so ravenous. Tunes, I want to get your reaction to something because I think it was yesterday. I saw someone keeping track of their Monad interactions on note paper. They were writing down all the interactions that they had with testnet on paper, like it was like they were creating their own block explorer by hand. And it turns out they weren't eligible.
Right.
Insane. In other news, you guys are also airdropping to everyone who has participated in an echo round. This is a pretty novel way of doing things. You guys are also one of the teams that is accustomed to going out and trying new things in the spirit of crypto experimentation. What was the motivation to choose Echo, and why include everyone who has participated in an Echo round?
Right. So, just to start, I would say that I'm not the one that was in charge of, selecting who isn't part of the criteria. So I don't want to necessarily speak for, the org as a whole as to like exactly why. What I would say, we have a good article that we released that talks a lot about eligibility criteria, anti-civil efforts, Monad community, on-chain users, crypto community, crypto builders, crypto curious, Monad builders. Generally speaking, I think that there's just this, like, distribution is really difficult. And fortunately, a platform like Echo is a great, almost, I guess, whitelist of people who, are both real and are the type of people you would want to kind of be part of your community. So, any sort of list power users that represent real on-chain users, real crypto community, I think we tried to target and include. We also included Legion, which is another sort of on-chain fundraising platform. So yeah.
Got it. Yeah, this was an effort of anti-sibling, which makes a ton of sense. All of the users that are participating in deals on Echo and Legion are all KYC'd. And so by doing this, you can be assured that you're getting real humans to participate in the ecosystem. You mentioned that the claim ends, was it November 3rd?
Correct, November 3rd. November
3rd ends. And does that mean Monad will go live November 3rd? Once the claim ends, we will all get our tokens?
So just to, I guess, go from the FAQ, it doesn't explicitly say that. So I don't want to be the source of truth here. But I mean, there's nowhere that's been said that the moment that the claim ends is the beginning of mainnet, right? So.
Okay. The Monad Intelligence Agency is going to fact check that one. Okay. And when it happens, putting that aside, regardless of when exactly it does happen, you guys are going to go live, and you've got not only a ravenous community of users, but also builders that have decided they're using Monad for their applications. Is there anything that you can give us a taste of, whether it's yields or points or games or apps or DeFi? Like, what are some of the projects that stick out that have already committed to building on Monad and will be live day one? Is there any apps or anything that you can shout out as far as, whenever it happens, November 3rd, maybe not, but you guys are going to go live and everyone's going to get their tokens. What should we do on the chain? What's going to be live, and how should we get involved?
Right. Yeah, Monad has, in my opinion, a very strong ecosystem for a pre-launch chain. It is kind of interesting how high expectations have gotten for chains on day one now. If you look at something like Solana, I don't think there was any concept of Solana trying to build an ecosystem of apps before they launched. It was a technology project, where then the thesis is if you create really good infrastructure, then you can create a good experience for both users and developers. So I would say Monad similarly is a real technology project where the entire chain is built from scratch. The logic of what it's designed to be comes from first principles. It's fully EVM compatible. It's a novel consensus mechanism where when it launches, it'll be the state that it launches in, and the way that the system is designed is where it can actually scale up to thousands of validators. You get very, very fast finality, under a second. The block times are 400 milliseconds, can maybe, very comparable to Solana. Mm-hmm. And the chain has massive throughput. So, we're talking 500 million gas per second. Just to put that in context, Ethereum gas per second is under 5 million, right? And so
you said 500 million on Monad.
Yeah, correct. So, the idea here is basically it's twofold. One, you do have new apps that are unlocked when you enter into these bounds of, high performance, very fast transaction times, and very low fees. That's where you start getting into kind of like order books. You have things like 𝘗𝘯, which is a spot order book. Crystal. You have things like Purple, Drake Exchange, which are perps order books. But then also, if you're building a consumer app, right? Not to try to turn this into criticize Ethereum thing, right? But you basically need the chain you're building on to be able to scale well. And so what this means is that, one, it needs to be able to handle a lot of throughput, a lot of transactions per second. But then two, also, is that once you start experiencing that load, you need the transaction fees to stay low. And so you could look at the stress test that happened as you were saying, like a week ago, or where there's a flash crash, things started getting crazy, like fees on ETH are spiking to crazy levels.
So gas at 250 plus.
Right. And so if you look at the median gas fee during that window of Solana, it was significantly lower than, L2s like Base or Arbitrum or whatever, where the L2s spiked and Solana didn't so much. And so the point I'm trying to say is that there's a lot of apps that basically have a ceiling towards how many users they can really handle. Because if you have an app where suddenly it goes viral of 10 million users, well then all those users are almost going to start pricing each other out, because transaction fees are going to start spiking because the chain isn't designed to handle that load and maintain those good user conditions. And so basically any app that is built on the EVM today, we feel confident that, you can give, as a builder, you can give your users the best possible experience at scale by building on Monad. And so there's lots of awesome consumer apps being built on Monad. Can give some shout outs to 𝘰𝘳𝘰𝘳, for example, which is kind of prediction markets for social media, RareBet Sports, which is, kind of prediction markets for sports, Lever, which is leverage sports betting, Loot Go, which is kind of like, Pokemon Go meets StepN. Omnia, which is, Sappy Seals kind of, their game. There's lots of really interesting things happening. And just as a last component is, again, it's like this dynamic of building an ecosystem pre-launch. I think there's also a lot of builders who generally are not super interested in what they consider as wasting time by like launching an app on a testnet. And so I just wouldn't be surprised if whatever my or anyone's expectations as to what Monad's ecosystem will look like 3 months after launch, I think it's going to be really, really hard to predict, because there's probably a lot of talented builders who are just waiting for it to actually launch, see if it lives up to the promises, see if people are actually doing stuff on chain, and then, hopefully, they'll dip their toes and, we can really start having some fun.
Makes a ton of sense. There's network effects as a result. Once you see the liquidity and you see the users, you want to start building on top of that and tapping into that. And that's the network effects of Monad going live with some day one launch partners and a ravenous community that you've built yourselves. And then the users and the builders, or excuse me, the application builders on the outside kind of seeing that and wanting a piece of it, and then coming in to compete for their share as part of the community. And that's ultimately where you get this healthy nature of competition between applications. And that is what makes these apps the best, because then they are pushed to be better and to innovate. Tunes, absolute pleasure, man. Congrats on all the great work. You guys have inspired a whole subset of the crypto industry around Monad. People are really, really excited. And I think it's for good reason. So I appreciate you coming on. I'm sure you're busy. We're going to get you out of here so that you can continue trolling all of the Monad community members. 𝗵𝗠𝗏 to you, sir. And I look forward to the launch.
Yeah, Robbie, thanks so much. It's really fun to see Monad take over the timeline, and keep your eye out for the pre-reveal, because it might just happen again.
Wow, will do. Awesome. We'll keep our eyes out, and yeah, keep up the great work, man. We'll talk to you soon.
All right, take care. Thanks, Robbie.
Cheers. Banger. Wow, Tunes. I think he might have dropped the alpha. I think he might have just, look, he didn't say November 3rd, but he kind of said November 3rd without saying November 3rd, right? There's nothing explicitly says once the claim ends, that's when it goes live. But I mean, guys, they're not gonna make everyone just wait. They've made us wait for 2 years, right? They're not gonna make us keep waiting. Wow, what a show. All right. I think people are gonna clip this show to an oblivion. I mean, just check out the rollup. The breadth of going from a stablecoin OG with Sam from Frax to another gigabrain legendary Sam Trabar at BitDigital, one of the leading Ethereum digital asset treasury companies. Think about the pure DeFi to the legendary TradFi DeFi, crossing the chasm on both sides of the aisle. and then we bring it back and we go with Alex G, the super technical just wizard when it comes to ZK, and we wrap it all up with good vibes from Tunes. I mean, you couldn't ask for a better show. We're going to be clipping this one. I hope you guys are going to be clipping this one. I hope you enjoyed this show. I certainly did. There's tons to unpack on all across the board. So we're going to let you guys dig back through. If you enjoyed it live, you'll enjoy it even more second time. Don't be asleep at the wheel. Don't be a ghost watcher. Go give us a follow, give us a subscribe, give us a comment, give us a like, a retweet. It all helps. We want to keep coalescing and accruing all of these guys on one channel to make sure that you guys don't miss a beat. If you guys have been watching our content, you probably got the Monad airdrop. So keep watching, keep staying involved. We're going to keep bringing you the realest, biggest, best creators, founders, builders, projects, yields, and assets in DeFi. Thank you guys so much. We're going to see you next time. Peace.